Hi, I'm Addie Pruitt, a New Orleans-based estate planning and tax lawyer. I mostly help Louisiana professionals on ways to preserve their property and transfer it to the next generation. Today, I'm talking to you about Patagonia. It was announced, I believe, like a week or two ago that they did some pretty sophisticated tax planning in order to save the environment. I guess it depends on who you ask whether the planning was mostly done to help save the environment or to save a boatload of taxes. But I thought we would talk about it a little bit, and I'll explain to you what was done, and you can maybe come up with your own conclusion on what was happening. So Patagonia, as I understand it, was owned by the founder, his wife, and two children. I believe they owned all the voting stock. And what they did was they took that voting stock, they donated 2% of it, which were all the voting shares, to a trust. They paid, I think, about $16 or $18 million of estate tax on that donation. And then the remainder, 98%, was donated to a 501c4 organization called the Hold Fast Collective. And the purpose of this Hold Fast Collective is to engage in ways to stop or halt or slow down climate change and all the bad things that come along with it. And so, when I first heard about it, I was like, wow, that's a pretty substantial donation. Patagonia is worth $3 billion. By structuring it this way, Bloomberg estimates that they saved at least $700 million on taxes. And that's because when they donated that 98% interest in Patagonia to the 501c4 collective, they were able to avoid all the built-in capital gains that they otherwise would have had to pay on that donation. Yeah. And so I think actually I might have that wrong. That's how the amount they would have paid if they had donated it to their children instead of someone else. And then I think I read somewhere that the capital gain savings could be over $1 billion. So some very very good tax planning on Patagonia's part to avoid that tax. But many people have said, allowing a couple of things to point out. The Whole Fast Collective was a 501c4 organization. That probably doesn't mean much to you, but let's kind of contrast that with a 501c3 organization. That's generally what you think of when you think of a charity. They have some sort of purpose. They cannot go lobby the government on your behalf. That's a 501c3 organization. The interesting thing about 501c4 organizations are that they can engage in political activity. So they can do lobbying. They can do lots of other things. And I believe last month there was a gentleman from Chicago who sold his company through a 501c4 organization, avoiding a ton of taxes, but contributing that money, I guess, to more conservative organizations. So depending on where if you think, well, I really like to fight against climate change, this is a great thing, it can also go the other way and be used for purposes you may not like. So that's something to kind of think about when you're thinking about whether or not wealthy individuals should essentially be allowed to choose how they support the government. They can choose not to support it by donating money to charity, or they can choose to, pay the tax, so to speak. And so there's been a lot of, podcasts, articles, news articles, all about this, about the Patagonia transaction. If you want to learn more about it, I suggest you log on to a few of those. They have some really good information, some good points of view on those. A couple other things in the news that I just wanted to touch on. Last night, the ongoing saga of Elon Musk and Twitter, which I know I've talked about, made some comments about on this series. But he has decided he's going to buy Twitter, mostly because he will lose in a court of law. He signed a very binding contract drafted by very sophisticated attorneys. And I believe they did some discovery, and some text messages came out that did not quite support his position to withdraw from the deal. So I guess that rather than just pay $20 billion in damages, he might as well figure he'll pay $44 billion and own it all, or something like that. So as I said, that was announced last night. Who knows what's going on with this guy? It could change tomorrow. So it might be something else that we can talk about. And then finally, I know tax returns for individuals are due very soon, the next 10 days. One thing I just wanted to bring to your attention or point out was that there are these things called I-bonds. They are savings bonds based on an inflation rate. Right now, as I'm sure you're aware, inflation is higher than it's been, I think, probably in my lifetime for sure. but these I bonds are currently paying a rate of 9.62%. So that's, if you think about it, for every $100 you put in, you would get $9.62 back. Savings bonds are guaranteed by the full faith and credit of the United States government, which makes them a very safe, very attractive investment. And one thing you can do if you have a refund coming to you from your taxes, you can actually elect to receive $5,000 of that refund in I bonds. This is really kind of important or interesting because normally you can only buy $10,000 worth of I bonds in 1 year. But if you can still buy the $10,000 of I bonds if you would like, and get $5,000 from your tax return. So if you are looking for a place to hold some money, you should definitely do the diligence, because there are lots of rules. You have to keep it in there for a year. You give up some interest if you take it out before 5 years. So it may not be the best move for everybody, but if you are getting a tax refund and are looking for somewhere to invest that money that seems pretty safe, that might be a place to look. So I know this is kind of short and sweet, but that's all I got really for you guys today, I guess. And then what's new with me is LSU volleyball. Maybe you can see behind me, I got the volleyball team. We had an alumni weekend this past weekend, which is amazing to see good friends from long ago. But I am so high on the Tigers, very excited about the kickoff with Tennessee LSU football, 11 a.m., sold out Tiger Stadium. Unfortunately, I'm not going to the game because I have to be coaching soccer at 9 a.m. But go Tigers, and I'll talk to y'all next month. Okay, bye.